Hello my friends, welcome. This is Market Commentary with Axiory. Today we have the last day of the first half of a year, and apparently, as media outlets point out, S&P 500 is on a track to have the worst first half of the year since 1970. Well, yes, it does not look really encouraging. As you can see, the drop started almost immediately at the beginning of the year. We are almost in the on the long-term lows. You can see that the lowest level was in the middle of June, but the last few days of June are also pretty bad. The price came back above 38.2, but is now going below 38.2 Fibonacci. We are inside of the wedge pattern. Most probably currently we are expecting movement towards 50% Fibonacci here, so definitely the sentiment is negative. Another thing that is important is that yesterday we had comments from the biggest fish in the central bank market, let's say. We had comments from central bankers, from Christine Lagarde, from ECB, from Jerome Powell, from Fed, and the general outcome of those comments are that inflation was not transitory, well, surprisingly, and that we are most probably not coming back to the environment of low inflation. We should brace ourselves for the times with higher inflation. Well, who could have expected that after billions of dollars were printed for years and pumped into the economy, and now we are having results. So many people were joking that, well, this inflation of course is not transitory. What they were talking about for months was kind of ridiculous, and now we can see that it was because the inflation is not transitory, and most probably it's gonna stay with us for a longer time. How currencies reacted? Well, mixed reactions. So for example, euro is going lower, but American dollar is pretty strong. As you can see here, we are climbing higher, and actually yesterday those comments resulted in a strengthening of American dollar. We escaped from the pennant formation, and we are on a good way to set new long-term highs on the dollar index. So that's it, guys. We have big movements on currencies. We have declines on stocks, and this is the market right now. Thanks very much for watching, and all the best in your trading.